Welcome to the Creative Investor. This is the first pilot episode, and I am excited to be a part of it, to be helping you. Today, I'm going to be using the Robinhood app. I'm a big fan of Robinhood, one of my favorite apps of all time. Constantly using it, love it. The reason I love using it, it's very simple, it's very easy. I use TD Ameritrade and Webull. Thinking about using Charles Schwab, but those are the three main ones I like to use. Give you a bit of a rundown. I will never claim to be the most top-notch, greatest investor of all time. Most of the money I get from my contracts, I usually stash away into other sorts of investments through different accounts, but I won't show you all of them. I like using Robinhood, though, at least when it comes to doing tutorials, because it's the easiest one to use. It's probably the easiest platform to understand. TD Ameritrade's pretty easy too. A lot of the platforms, in all actuality, are real easy to figure out. But TD Ameritrade Robinhood just has that easy, seamless use, and it would probably be easier to do a tutorial with Robinhood. And considering most of the interesting creative ideas I've come up with have been done through Robinhood. Anyway. In the Creative Investor, I kind of want to go over, by the way, I'm doing this episode in my bed, so what's kind of neat, though, is now there's been some that I've lost money on, not a lot, though. Usually the gains outweigh the losses. Most of the time I kind of just stash away the money back into my bank account. It's kind of fun. But yeah, a lot of the stuff I do is a lot of short selling. And the reason I love short selling bad companies, because when you're right, you're so right, it's just crazy. And you make way too much money off of the deal. So, one company let's go over JCPenney. This is an interesting put option. When I started with the JCPenney put option, I've actually had $17 in return value from this, so it's been the net positive, which is good. But like finding bad companies is really surprisingly easy. Let's just take a look at JCPenney here. When you look at the stats, it's just, first off, they're in the penny stock range. Check that out, 25 cents. Let's look at the I ended up buying a few stocks. But if you look at where they're at, man, they're just not in a good position. They're really in a low position. I will say this, though. I'm in a good position to buy a little bit of shares, without there being too big of a loss or anything. But here's the deal. Look at these technicals. It's just not good. JCPenney is not a good position, man. They're going out of biz. It's just my opinion, but they're just a rough one, man. So let's just take a look. Look at this. So what I do is I judge by market cap, as you'll see right here. I don't know if I can... Yeah, I can't really draw it out. But you see where it says market cap is $83.46 million. That's not bad. It's a good... it's not like really that great, though. It's a very small market cap. But JCPenney, man, used to be a bigger company than this. And they went downhill bad. Oh, man. Sorry, audience, for the yawn. Let's continue. Doing this late at night. As you can see, the time is like 1:07 in the morning, but I just had to do this. So as you see, I'm mainly doing I have an option on this. A lot of the times I actually sell my options contracts to other people. I don't actually exercise the options. I just know when to get in to buy the option at a cheaper price, and I buy a shit ton of the options themselves, and then I straight up sell these options, man. So it's a fun process. I really, really, really enjoy it. So here's something interesting, and I want to show you what I'm doing with Aurora Cannabis, right? Aurora Cannabis, what I'm doing with them, it's a little bit different, okay? what I'm doing with Aurora Cannabis is I'm taking, look at this chart. Let's look at the chart here. It's usually a way to do it. Here we go. So here's the chart. What I find super fascinating when I'm looking at all these, so you can see the time frames. I like doing the candlestick one because it's just easier to read, and you could tend to tell how it went up, how it went down. If you look at, you can see like at that time frame, what did it open as? What was its high? And you don't notice much of a spike. Now here's the spikes that happened today. I'm a technical analyst sometimes, but it's not the main basis of what I do. I play both sides, and I don't try to predict the market at all. I do, however, like to look at the company. I don't try to predict all the time the investor's emotions. That's too tough to figure out. But one thing I like to do here, check this out, is, look at this. You see, I already own 65 options contracts, right? You see that? That's huge. That's quite a bit. Now, they're doing what's called a 1/12 reverse stock split, and history always serves these as being disastrous. But here's what gives me the advantage in all this. One, all these options I selected are slightly below the current strike price. So that means once the reverse stock split happens, things are not going to look good. It's all going to go downhill, and the price per share is going to go down. And these contracts you see right here, all these put contracts, which basically it's $3 one. We'll ignore that because that was a flub. That was one I bought out of pure stupidity. But yeah, check out all these other ones. This is huge. Look at the returns here. $271 so far in total return value. And you're probably wondering, why do you keep these contracts? Well, the contracts are good because they don't expire till a certain point. The one for May 1st and May 8th are the ones I'm worried about the most. May 29th, actually, I think is a solid. It's probably my best one. And I'll tell you why, because the reverse stock split's happening around the 11th. And the reason the one on the 29th is good is because it's going to be afterwards. And what's going to happen is, in a no short order, a lot of the times these stocks, they just go downhill. And it's just not, I don't know, it's just not going to look good. I don't think it's going to be good. Well, as you can see, my pops messaged me, but next time I'll turn down the notifications. But yeah, so the thing is, best thing we could do is I will take, as you see these options, I buy puts, and they're kind of protective puts against my current position. Aurora Cannabis was one that I was never too sure about. And the reason is because they're a good company, fundamentally. The problem is they don't know how to manage their cash. You could be a great company that knows how to produce a product at massive scale, but if you don't manage anything and you're expanding too quickly, and the problem was they were expanding too quickly in a market that was not expanding with it as quickly. Now, the only reason the market wasn't expanding along with it is because there's a lot of legalities, a lot of stuff, but Aurora Cannabis is still my number one go-to, and what I'm doing with the money that I get from work and all my other things is I'm trying to lower my average cost, as you can see, and I've lowered it over time. I got plenty of shares, but this is the interesting factor. The 65 contracts, 63 of those are puts. And the further it goes down, by the way, the more those contracts the more those contracts are worth, and I'm just excited to see the outcome. But I want to thank you guys. I'm probably gonna just end it here in just a little bit. The video. I try to think. This is a late night one I made, and I wanted to just get it out of the way. But as you can see, I like the Robinhood app. I got a lot of put contracts. I'm a big contract slinger with the put ones. I just I don't like doing calls that much. I'm optimistic though with a lot of different companies. I like dividend payout stocks. I love good companies though. If I see a good company, I'm gonna buy it. But if I see a bad company, I'm gonna short it. That's just all there is to it. But I want to thank you guys so much for taking the time to view this video. As always, if you have any questions, just let me know. I'm always trying to get the next edge as much as I can, but in summary, these puts I buy gradually over time for Aurora. Aurora is my main short right now because of the reverse stock split, and I got right on the right time with a lot of these contracts. I'm going to continue to just give you more information. I want to keep you guys updated. But this reverse stock split, I have a feeling it's going to be pretty detrimental for the most part. But investors are going to sell off what they have. It's going to lower the value immensely. And it'll be interesting to see where it all goes. It may continue to fall below, and we'll just have to deal, But, yeah, just making sure I'm checking everything real quick here. Thank you guys so much for taking the time to view this anyway. That's just a little bit of an insight, first episode about the creative investor. In summary, what I really wanted to show you guys was that it was the style in which I invest sometimes, and I'm very creative with a lot of my ideas. So when it comes to stocks that have a reverse stock split coming up, like Aurora Cannabis is 1/12 stock split, I took advantage. Not gonna lie, I took total advantage, and I bought some put contracts, and I'm very excited about them. So I'm gonna keep doing them. I'm going to see where they go. A lot of them are pretty long-term, so I got a bit of an advantage there. And I'll continue to hold the cards. I'll continue to hold the advantage. Thank you guys so much once again for viewing my channel. It's on YouTube primarily, but I'm going to post this as soon as I can. If you have any questions, please let me know. I'll try to improve it and come up with a better game plan. All right. Thank you guys.